Welcome to the main topic of episode 111 of the Security Token Show. Today we're going to be talking about the first Miami real estate deal, the first institutional deal. It's actually raised already over $55 million from the crowd, and it's worth well over $200 million. This is a multi-use property here in Miami. It's actually right across the street from our alma mater, the University of Miami. It's the Thesis Hotel, which also has residences, co-working spaces, it's got restaurants, it's got pretty much everything. It's a cool project.
And not only that, but they're eating their own dog food and they're going to be tokenizing the property. So they have a really innovative structure in how they're going to do that. But first, before we dive into that, let's talk a little bit about NRI. So Nolan Reynolds International owns over $500 million in properties, both here in the United States as well as in Costa Rica. And what they're trying to do here is create more liquidity and access for these real estate investments. So as you talked about, they targeted a really high value property in downtown Coral Gables, right by University of Miami's college campus. And they have both apartment buildings as well as they have hotel units and commercial property as well in this property. And they're creating a more democratized access. So what they're doing is they split up the fundraise into two different tranches. One that was a privately fundraised deal, as well as a second piece that was publicly available through the crowdfunding platform CrowdStreet. So they were able to potentially successfully raise up to $75 million for this property of this really large institutional real estate event. And now they're looking to take this opportunity that they've raised through a traditional financing vehicle and explore tokenization.
It's exciting. We're talking about a real estate developer with over 100 years of operating experience. This is not just somebody saying, hey, let's try out this tokenization thing. They really think that this is the future of their industry. And so they did exactly what you just said. They gave a capability of their existing private investors to put in 20 million, and then they managed to raise 55 million through a crowdfunding portal called CrowdStreet, focused on real estate offerings. And what have they done now as a part of this tokenization process? Well, actually, they've enabled it so that you actually retain your traditional investment in what's called operating units, the operating partnership units, which essentially entitle you to the net profits of the operating income from the property that we just explained to you. But more importantly, the reason for this is because traditional investors want tax benefits. There's depreciation that happens to this building, and they get to leverage that from a tax purpose. However, none of that is liquid, or it's designed to be liquid. And this company, NRI, has gone ahead and created an innovative structure using an UPREIT, which essentially is a REIT, a real estate investment trust, that is the umbrella to it. What happens is when you decide that you want liquidity and you no longer want your depreciation benefits, well, you can go ahead and convert your OP units into your REIT shares, which are, of course, then tokenized and will be in the future available to trade and have liquidity for.
Yeah, so you got 100% of the property in these OP units from the initial fundraise. And then over time, some of those individuals will continue to convert as it becomes more and more into this REIT status. You've got some that'll be in the REIT, some that will be in these traditional units, and those REIT units are the ones that are going to be tokenized and therefore trading on a secondary market. And the kicker here is that with a traditional Reg D 506C fundraise, you're going to have a 12-month lockup period. But if you choose to convert after 6 months into this REIT structure, you actually may be able to get liquidity even quicker, which is going to be fascinating. They're going to publicly register this REIT so that anyone can be able to invest and trade this underlying asset.
And they haven't picked up on it yet. That's exactly why they're doing this. Why tokenize? Because they want to give their early investors the chance of liquidity at an earlier event, not just tax depreciation. You can take advantage of it if that's the name of your game. But if you want to get out, now they've created this beautiful UPREIT structure that will be tokenized to enable that early liquidity. And that's very exciting because still at the same time, they're targeting an 8% return at least, so 100% of the net operating profits will go back to investors via distribution, and then 75% beyond that will then continue to go back to investors. I think they said they're targeting roughly around a little bit over 9%. So that's very, very exciting. You now might have a real estate asset that's producing yield, that has the capability of liquidity, but still offers you those tax benefits that might have attracted you to it in the first place.
Yeah, I mean, a 9% yield on a real estate property that's got 99% occupancy rates as of today is a fantastic opportunity, really exciting in the hotbed of Miami, Florida. This is just a tremendous deal, very, very exciting to see them bringing such an institutional product to market.
In fact, they even created something else that I think is worth sharing. What a lot of questions happens with real estate is what happens to capital calls and things like that in the event that there is some kind of an emergency or they're building something new. Well, in this case, according to the offering, they've actually created a reserve fund. So you actually don't need to worry about future capital calls as an investor. They've also already anticipated this. And so actually, as part of your whole offering, you really only need to worry about the opportunity to go ahead and convert into this new REIT token.
So what's next for them? Well, the fundraise is subscribed, so that means that the lockup period is on the clock right now, which is exciting news. The tokenization is going to happen in the next 6 to 12 months, depending on when they're actually able to execute that, issue the tokens, handle all of that process. But then after that, they'll hit the secondary market, they'll figure out all that stuff, but they're not done here. They're trying to tokenize more properties. They're trying to replicate this process with more real estate properties. So I would imagine we're going to see more deals like this coming soon from MNRI.
They've got over a $500 million portfolio, as we mentioned earlier, and you can expect that many other real estate developers will also follow suit. Now that a leader like this is showing, by leading by example here, that you can actually tokenize and take advantage of it and do it the right way. So that's really, really exciting for the whole security token industry. It just means a whole lot more institutional real estate deals are going to be coming our way.
So if you want to read more about this specific opportunity, read the case study published by Mike Lingle through the Security Token Advisors on the Security Token Market blog. That'll be linked below, as well as through all of our social medias. You can also reach out to Nolan Reynolds and check out more information there. But with that, I think that wraps up our main topic. So definitely check out our What's Drippin' newsletter. Check out more of our resources. Subscribe, like it, drop a comment, and connect with us on LinkedIn or Twitter to talk more about security tokens and stay a part of the community.
In fact, we just launched our Discord channel, so go and give us a shout there. And meanwhile, catch you next week and happy tokenizing.